Well, to talk us through how traders are acting and reacting right now, I'm joined in the studio by Greg Davies, Head of Behavioural Finance at Barclays Wealth here in London. Greg, welcome. First of all, just talk me through a little bit about what this means about sort of behaviour finance. What does it mean?
Well, behavioural finance is a relatively new academic field that seeks to understand how people actually make financial decisions, as opposed to classical finance, which really made the assumption that we're all completely rational all the time.
Okay, and so when you look at the markets at the moment and you see, for example, a company whose fundamentals are strong but is being sold heavily, you know, we've seen days where we've lost 4%, what does that tell you about the way people are reacting?
Well, these shifts that we see up and down by 3%, 4% a day are very difficult to justify on the basis of any fundamentals whatsoever. So what we're typically seeing there is investors' short-term emotional time horizon starting to take over. Our emotional brain, if you like, takes over a rational long-term evaluation of risk and return. That, coupled with the sort of herd behavior of enthusiasm or fear that we see in the markets, can lead to these enormous day-by-day shifts that are very difficult to explain in a rational sense, but relatively easy to understand if we just think about how we're human.
Indeed, and we know what we're having a lot of, we've seen it today with this huge rise in the stock 600 stocks around Europe all going up, is that when we get a little piece of good news, or the market perceives it to be good news, then that really does, on the other side, produce quite a strong rally.
Absolutely. Well, we've had so much bad news of recent times that I think we're in a situation where markets are pricing in not just rational risk, but they're pricing in what we might think of as anxiety. So we've got this situation where the markets are pricing both risk and anxiety, and when we get that little piece of good news, what starts to lift is the anxiety. We start to get a surge of relief. It hasn't done that much to the long-term fundamentals, but it has systematically changed the feeling of mood in the markets, and that can drive that relief.
And do you look at how news is delivered? For example, if a finance minister stands up and makes a pronouncement, is that perceived differently than if a newspaper perhaps is able to leak that story 24 hours in advance?
It certainly can make a difference, and does make a difference. I mean, we don't study that in what we're trying to advise private investors to do, because what we're trying to get them to do is actually to almost ignore the short term.
Yes.
To get over that fact that, yes, we all live in the here and now, we live in the present, but our goals are for the future. And so we need to, yes, we need to price in rational risk, but we almost need to avoid these emotional responses of anxiety, of relief, of elation. And actually responding too closely to day-by-day news events is one of the things that can harm our investment behavior in the future.
And does that take, I mean, you're talking about stressful times like this, causing this anxiety that makes us react more strongly. Does it take nerves of steel to say, okay, right, the whole world's going to, you know, what we're going to do is look at the fundamentals of this country?
Nerves of steel are one way of dealing with the problem, but of course not everyone has those. So there are practical things that we can do to help us to support our nerves of slightly less than steel. Most of these are things that you want to do before the turmoil comes. So you want to establish for yourself a good decision-making framework, a good set of investment habits. You want to establish a diversified portfolio that is structured so that if you're the sort of person who doesn't have nerves of steel, when those inevitable times of turmoil come, you're less tempted to run for the hills or to sell out at the bottom.
And what are you looking for coming up? Is it Cannes that you think will be the next trigger for people to behave perhaps more emotionally than rationally?
I'm actually trying to look even further ahead than that. We don't know what events are going to transpire and when, and we also don't know the effects of those. What we do know is two things. We know that in the long run, on average, investors are rewarded for taking risk as long as they do so in a sensible, diversified way. And we also know that in the short run, markets respond through anxiety and relief and elation. So what we're trying to do is to say, are assets good value now for the 5-year to 10-year horizon? We know that these events are going to occur. We need to protect ourselves against them regardless of what happens. And right now we're of the opinion that equities are good value for the long term. If the markets are pricing in anxiety, all the better, as long as we can overcome our own anxiety.
Indeed. Greg Davies, thank you very much indeed from Barclays Wealth. Fascinating stuff. Thank you.